we are waiting to hear out is the Macrotech Developers Management. The company has raised 4,000 crore rupees through a QIP, through the QIP route, and sources indicate the company has received very strong demand. Joined by Abhishek Lodha, Managing Director and CEO at Macrotech Developers. Good morning, Abhishek. Good to have you with us. Okay, so the money is there, the one that you promised your QIP. What are you going to do with it?
Lata, great to be with you. And I think this is the a start of a very long-term upcycle in housing in India, where there will be a significant growth in volumes, especially in mid-income and affordable housing. People really want bigger homes, better homes from the top brands. And as India's largest real estate developer, we see a very exciting opportunity for growth. Of the 4,000 crores that we've raised, we intend to use about 3,000 crores for capital light growth, largely through the joint development model, focusing on Mumbai and Pune, which are sort of our target markets, and there are lots of areas within those cities where we are underrepresented currently. We'll also potentially explore an entry into Bangalore, given the tech-related boom and wealth creation that's happening there, but otherwise quite focused on Mumbai and Pune. But we see a lot of volume growth over the next few years, and that's the reason for raising this capital.
Okay, by the way, Abhishek, just stay on. Those are some live visuals coming in of Vijay Shekhar Sharma. Paytm will be listing in, I think, just about half an hour from now. What a story, what a journey it's been, right? The largest ever IPO to hit the equity markets, and he hails from a small town. I mean, look at how far Vijay Shekhar Sharma has come. Valuations aside, you know, stock market aside, the business that he has created. I think he's from Aligarh, a very small town, and the journey that he has started. It's been brilliant.
Also, I just want to say one thing, and we'll discuss this with experts who really watch the space carefully in the next couple of minutes. But I think everyone's right now raising the question. There's a lot of competition. But he's the original innovator. You know, he brought the whole concept of wallets, payments in a different way to India. And I guess that's what real entrepreneurs are made of. That yes, there's a challenge.
I'll tell you something, Surabhi, there are no prizes from the stock market for creating a market. Usually, it is the second in the market who actually gets the cream, because the creator has done the heavy lifting.
But Lata, I'm just saying that I guess this is also the test of the real titans and the real entrepreneurs, right? That there's an opportunity, there's a challenge, and there's a competitor right in your face. Can you still innovate, and can you still disrupt and win the game?
All right, we'll go back to that. We're going to talk about the listing, but Abhishek Lodha is still with us. Abhishek, thanks so much for joining us. This is Sonia here. I want to ask you a little bit about your debt reduction plans, more to do with what's happening with the London properties. You were looking to monetize it in some way and perhaps reduce your debt. What can we expect over the next, say, 12 to 18 months?
Sonia, as a company, we are already now with this capital raise, our debt equity is down to approximately 0.75. So we are very comfortably placed when it comes to debt. As a management, the decision is to be very conservative when it comes to our balance sheet. So even as we focus on growth, it's going to be a very modestly leveraged balance sheet. The maximum leverage we want to have is 1 year of operating cash. The UK business has been performing much ahead of expectations and guidance. We expect to return about 15 to 20 billion. That's about 1,500 to 2,000 crores back from the UK to India sometime in fiscal 23. And also repay the USD bond that was used to finance the UK business sometime by the end of the current fiscal, which is fiscal 22. So that part of the business is performing quite well. But obviously the excitement, the growth, and all the focus of the company is in India. We intend to make no further investments outside India. The entire focus of our growth strategy is in India.
Okay, so how much will debt reduce, and therefore what will be the reduction in annual interest outgo, you think?
Lata, our interest costs will, in fiscal 23, be down to about 800, 900 crores. And from fiscal 24, it will get around to the 500 crore annualized handle. So that's really, from current, this year, it will be about 1,500 crores. So it's a significant accretion to earnings. I guess the bigger point, in addition to that debt piece, of course, is how earnings are growing.
Yes.
Because with this capital of about 4,000 crores that we raised, of which 3,000 we intend to deploy for growth, we expect to add about 40,000 crores of new projects. So when you add 40,000 crores of new projects, that's about 8,000 crores of earnings over a 5-year period.
Fair enough.
and that's very very compelling, and is going to be a huge leg up. Because as I said, we find that India's housing story has just about gotten started. That exciting visual of Vijay Shekhar Sharma from Aligarh creating so much wealth is going to be the story in every part of India. And as India moves from being a low income to mid income country, housing has always not only created a lot of employment, which it is and is going to create, as the FM said yesterday, the housing sector is going to play a big role, but equally importantly, it's going to create a lot of middle class wealth because housing supply, when it's disciplined, and that's what's happening right now because supply is very, very disciplined. It's coming only from a few top brands. There is going to be an modest upward movement in housing prices, and the wealth creation that happens out of that is going to fuel our economy.
So, Abhishek, I wanted to actually come exactly to that point. You mentioned that out of the 4,000 crores, 3,000 crores is going to be for growth. So, which are the additional geographies that you're looking at? Of course, you're already very, very strong here in Mumbai. And where do you see the greatest chance of price appreciation starting? Which are the markets that are already showing signs of that? And therefore, what would be the growth frontiers for you?
This year, price appreciation is looking like about 4-5% for us. Overall across, that's the average across the whole portfolio. And we expect that price growth in fiscal 23 and 24 will be upwards of that. We do expect and hope that price growth remains below wage growth so that the affordability remains very strong and volumes can grow. In terms of your question around geography, see, while we are very large, we've been India's largest developer for 7 years now. The fact is that we've been only present in parts of Mumbai. There are many parts of Mumbai itself where we have to grow into, and that can help us scale up meaningfully. Our goal is to be 14,000 crores of sales by fiscal 24 and 20,000 crores by fiscal 26. So there is a lot of growth just in Mumbai and Pune. And as I mentioned to you, we'll explore Bangalore. We haven't made a decision yet, but we find the story quite compelling given the tech revolution and all that it is doing for the city of Bangalore.
Okay, well, Abhishek, let me quickly squeeze in 2 questions before we are told that we have run out of time. One, how are margins panning out? Already there's been a fall from Q2 to Q1 to Q2. Is it likely to fall more because building material prices are going up? And secondly, the resistance over the past 10 years was to under construction houses because people burned their fingers in whatever JP or Amrapali or whatever. Has that hesitation gone? Are people coming into under construction?
Lata, both very important questions. In terms of margins, we sort of pre-COVID were about 13-14% PAT with a reduction in our cost of borrowing and the total reduction in debt. We are heading towards about high teen PAT margins. The quarterly numbers, based on what project is completed, which quarter, will vary, but that's the medium-term average of being in the high teens on PAT. We are able to pass on the cost inflation currently, and that's quite reassuring. In terms of your second part of your question, I think the market remains very buoyant, and housing demand is just about gotten started. India, top 7 cities are only doing 300,000 units per year.
1 minute. 1 minute, Abhishek. My specific question is, are people coming into under construction with the same gusto because of that fear psychosis?
Lata, the answer is they are coming back in a very, very compelling manner for only very, very selective brands. It's not across the board. It's only few brands where they have the reassurance that the project is going to be completed on time and the quality is going to be good, that they are coming in to buy under construction.
Okay. All right. We have many more questions, but unfortunately, we've run out of time. Abhishek, thanks a lot for joining us, and all the best. Congratulations on the demand you got for the QIP. So fundraising done, debt is they've sort of taken control of the debt situation, and the demand is also picking up. We'll do one thing. We'll take a quick commercial break. When we come back,